What's up, folks? It's Kenneth here, 100 Years of Wealth, streamhomeloan.com. Checking in with you guys. Hope all is well. I want to make this video for all of my people, mainly really directed towards all of my agents within the company, but also I think anyone, that's a loan officer, for one, can benefit, but possibly benefit from other sales industries where you need to go out and produce, So our company is a company with independent agents. Independent meaning that they work remotely, they generate their own business, and obviously they're getting support from us as a company supervision. We're also providing support in the sense of technology and information that should help them grow their business. But what we always said that we will do for independent agents is provide information on what's currently working, right? We want to make sure that you are aware of the different things that some agents are doing that other agents might not be doing, that's creating success. So, I'll make this short and sweet, and I hope that it can add value to what you're trying to accomplish. So I've been in the industry now coming up on 20 years, and I've worked in many different environments through many different markets. Times where rates were super, super low, and you had a lot of referral and repeat refinance business because rates kind of either stayed low or kind of kept trickling down, so that there was always some sort of reason for someone to refinance. Or even if there wasn't a strong reason and someone wanted cash out, there wasn't really a lot of reason not to do it because the rate was possibly the same, possibly a little better, and you're able to access cash at a pretty low cost. So in a time in the industry like right now where refinance business has taken a complete dive because of the fact that interest rates have jumped up so significantly this year, you have agents and companies struggling to create business and changing their business models on site. Like, we have some of our biggest lenders that are in our industry laying off people. You have people that like Loan Depot, which is a large lender, closing their wholesale division. I think that if I didn't have as much experience as I do, that stuff would kind of worry me a little bit more, but it really doesn't worry me because it kind of just tells me that certain institutions and certain companies just weren't really set up to survive any sort of change in the market. If you have a company where your whole environment is set up based on a rate market of 3%, and the staff requires the market to stay around that rate, because all you're really selling as a company, let's say like Loan Depot, is your low cost refinance or your low interest rate refinance. You're not really diversified and offering products that are outside of just the rate being the benefit. And obviously in our industry, in the finance industry, the rate is always going to be a selling factor and a main factor in any transaction. But if you have a diversified portfolio of products, then you're going to be a little bit more able to withstand any changes in the market, especially like rate driven changes, because people that are going to veer towards those programs like stated income or self-employed geared programs, bank statement programs, a lot of times those people have experience or have always accepted a little bit of a higher interest rate than what the conventional market is giving. So they're not as deterred by a little bit of an increase in interest rates. Not always. Of course, the interest rates going up are still going to affect that business as well. But my point is that if your whole business is based off of just rate and term refinances or being the low rate lender, then if there is a change in the market, you're going to have a really hard time maintaining that staff. Therefore, you're going to start laying people off, which isn't the end of the world. It's an adjustment for businesses, and a lot of businesses have to do it. And it doesn't mean they're going to close or that they're going to fail. It just means that that division probably started to take some sort of loss, and for some companies, that division is their company and that's their whole operation, and they close down. But for other companies, it's a division. It's a place where they've been spending money and making money, and then the downturn in interest rates makes it to where that same, division function within the company just isn't valuable anymore. For our company, we are a little better diversified in the sense that we have independent agents. They work remotely. They generate their own business, so our company overhead remains low. So in a time where production slows, we're able still to maintain and even grow, where we stay focused on the idea of adding agents and really just branding the company well, so that through this tough time, we can continue to grow, continue to add agents, continue to assist agents in growing their business, and withstand the tough times, so that when the market does recover and you start to see more transactions happening, you're able to capitalize on that. So I see this bumblebee creeping up on me. It's like ready to attack, so I'm just staying on guard. But with that being said, I wanted to make a video that really drove this point home. While you're here, like and subscribe so we can grow this channel. And liking and subscribing helps the algorithm, helps us push this forward. Share it with anyone that you know that you think can benefit from it as well. But as a loan officer, I really chose the loan officer side because I felt like, it's a side where I should be able to do more transactions than if I was focused on the real estate side. I do real estate transactions as well, but my company is a mortgage lending company, and that's really where I focus all my business or all my activity, and really what I'm trying to accomplish is based in mortgage lending. As a loan officer, you have different sides of the business, right? You can either focus on refinance transactions, you can focus on purchase transactions, you can try to focus on both of them, but sometimes it's really going to be the market and what's going on in the market that dictates where you should focus. For a very long time, people were like, saying that, oh, the rates are going to go up. Oh, you see them dodging this bumblebee. The rates are going to go up, and that when that happens, you're going to have to focus on the purchase market. Right? And for a long time I would hear that, and I never really, shifted my full focus on that to the purchase market. I think that I phased out of like focusing on originations and started focusing more on the company, so I wasn't really in that direct origination mindset every day. But that I started hearing that trend of like, oh, it's going to turn to a purchase market probably 10 years ago, 2011, 2012, I would hear those terms. And overall, rates stayed the same, or I wouldn't say the same, rates stayed low, rates even went lower than they were at that time, so there was always that thriving refinance market. But that was partially because the feds were purchasing bonds to keep the market, keep the rates low, because the economy was still struggling after 2008. So I feel like now we're at a point where they don't feel like the economy's struggling, it's the opposite, where the economy's like, has been booming for years, creating inflation, and in turn they had to raise interest rates to lower demand and therefore slow inflation, right? So we end up in the market where we are today. But my point being is that back then there was always this concept that, hey, there's going to be a point where you need to focus on purchases as your source of business. And a lot of people really didn't take heed to that because they probably didn't really understand what sort of conditions in a market would create a complete purchase market where refinances almost die, completely, like they are currently right now. So but that day is here, and not to say we know how long it's going to be, this market. I think things will always ebb and flow, and then there'll be a spike in refinances because rates tick down or for whatever reason. But right now, the reality of it is that the agents that are having success through purchase transactions. How do you get purchase transactions? You're either going to do some broadband marketing that costs a chunk of money and take a little bit of a gamble with that and see how much inbound contact you get, or you're going to go directly to the source of most transactions, and that's going to be a realtor, right? Like either you're going to brand widely to clients, or buy some sort of lead source that is directing to real estate agents, or to purchase clients. And that's always, touch and go. Today, literally, I got an email from Zillow saying that they are not going to be selling leads anymore to my company, right? Or to me. And I'm like, what that tells me is that they are consolidating all their leads that are coming in and selling them to the bigger companies. So that means that they're down a lot on lead traffic. So they're saying, okay, if we're getting 100,000 leads in, instead of spreading them out amongst, 50,000 companies so that they only get a few, you know what I mean? Like each company only gets a few, which is almost impossible to survive on and create traction. We're gonna lower that pool of agents, or that pool of companies that can actually take our leads, so that those people get more. So pretty crazy time in the industry. But what that tells me is it just reinforces what I already know. And what I know is that you need to go directly to real estate agents and make an impact with those individuals in order to create that business. You know, you have to go to real estate agents and talk to them about the things that you know regarding lending, the programs that are available that can help their clients on a one-on-one basis. Obviously, there's an ability to do some sort of mass marketing where you're emailing a bunch of real estate agents, texting a bunch of real estate agents. You can do that. I do get contacts from real estate agents that I actually look at and I review myself. But I think the best hands down approach is just to have some sort of small marketing in your hand, whether it's your business card or some sort of like little postcard flyer or something like that, and just walk into a real estate office. And right now, obviously because of COVID and just naturally, real estate agents aren't always in the office. But going into, if you spent a day and you outline 10 real estate offices in your area, I'm very confident that if you go into those offices and say, hey, I'm a local loan officer and I'm looking to help you and your clients, we have this, and this, you present just you don't have to go into a full spill. But if you just present, hey, look, we really work hard to make sure transactions close on time. Here's a little bit of our track record. Here's a little bit of what we do. We have the traditional stuff and we also have the outside the box stuff. Making that personal connection, letting them know that you're there, that they can forward a client directly to you, that they can bring you in on an email with a client that has questions about getting pre-approved. That's how you're going to make that connection with that one agent, and just letting them know that there are options outside of the traditional, letting them know that, hey, not everyone needs, or clients don't need to put down 20%, because there's still a lot of people out there that have those misconceptions. Letting them know that you can do a pre-approval within a couple of hours if they need to, and you can adjust the numbers on the fly when they need to. Making that contact and really creating a value proposition where you're like, hey, look, this is what I'm willing to do when you send me people. And for them, instead of making it like, hey, can you refer me deals, if you make it more about the value that you're going to present them as the loan officer, hey, you're always going to be able to call me if you have any questions. Once we get our loan approvals, we get on our conditions right away. We have a processor that's super experienced that'll work directly with your client to get all their conditions in. We close all of our loans within whatever amount of time. I guess you can't say all, because obviously things happen, but you get what I'm trying to say. You have to really make that impact with each individual agent, and possibly when you go into an office, ask if you are able to speak with the group of agents. Usually most real estate offices will have like a weekly or a monthly meeting. Schedule that in, see if you can go in there, ask them if you can bring in some water and some coffee, and just talk to the agents for 5 or 10 minutes. I don't think agents are looking for a long story or a long drawn out explanation and too much detail. What they're looking for is to know that there's someone there that can assist them with helping their clients get approved quickly, that you're on top of it throughout the loan process. Your goal is to get the loan done as quickly as possible to make sure everything works out smoothly for the clients, as well as everyone in the transaction gets paid accordingly. Things like that, coming up with, coming up on your own with a list of things that are valuable about the relationship that agent would have with you, and how you're gonna work to really accomplish what they need, which is closing the deal, getting the deal done. Letting them know that once we pre-approve a client, our closing rate is 100%, unless it's something outside of our control, right? Putting that confidence in agents so that when there is something that comes up, they're going to reach out directly to you. And a lot of times real estate agents, you can go in and meet new real estate agents. There's always an influx of real estate agents coming in, especially in the state of California. That's a very popular line of work. People know that it has a high income potential if they really make it happen. So you're gonna have an influx of real estate agents, and you can be part of their growth. You could be part of the reason why they end up being successful, because you're actually letting them know, like, look, the main thing in purchasing a property is finance, right? Like, knowing that there's options, right? Like if there's right now clients that are talking to real estate agents that want to purchase, but the real estate agent doesn't know to tell them that, hey, look, you can qualify. Oh, you're self-employed, but you haven't really made money this year, but you have a bunch of money in the bank, you can qualify. Oh, you don't have a job or an income source, but you have savings in the bank, you can qualify, right? That it's going to be up to us as loan officers, mortgage bankers, mortgage brokers to really articulate to the real estate agents who are really on the front lines. They're the ones going after clients, trying to get them into properties. And the better you are at creating little relationships with tons of real estate, and I don't want to say tons, like it takes a million, but get out there and meet real estate agents. But you create a relationship with a handful of active real estate agents that can turn into a very consistent source of business for you. Usually what happens is, and this is my experience, whenever I've helped a real estate agent and really, came through in the transaction, communicated well with all parties, pushed the transaction forward to get closed quicker than expected, I get a referral. Even if the referral doesn't turn into a deal, they send me someone. They send me a person that's looking to get pre-approved, and it shows me that my efforts that I put in on their initial transaction working with that real estate agent made an impact. So what I know, that if I was focused on my own originations right now, I would be spending at least a couple of days a week. And if I have more time to do it because other prospecting options weren't looking as attractive, I would be spending 2 to 3 days a week, a couple hours, a few hours a day, meeting real estate agents, going into their office, making an impact. That's how it is with title officers, title reps. They usually just go from brokerage to brokerage, meeting people, letting them know, hey, I'm here to help. They don't even really do much selling. They just say, hey, I'm here to help. Here's a pen and a notepad with my contact information on it. And the craziest story is that one guy that used to do that all the time at this office I used to work at in Beverly Hills, fast forward like 5-6 years later, I buy this house that I'm sitting at right now, and he's the title rep on the transaction. I didn't select him or anything. He just has that network, has that connection, or has that many connections, and full circle, I'm using him for my title rep, right? So that was just like a really good example to me of what works, and what works is consistency. So if you're out there and you're looking for transactions, you got to ask yourself, have you put yourself out there enough to even have like any thought at all on, oh, is this working out or not? Like if you haven't been out there meeting and greeting real estate agents, putting yourself in the position, then you're not doing the consistent effort that's going to turn into success for you. It's not hard. It's just takes consistency. And I think that once you do it a little bit, you'll realize that, it's just a change in activity. It's a change in what you're comfortable doing. And I think for a lot of people, it's, at first a little uncomfortable to go into an office, introduce yourself to a group of people you never met, and try to create a relationship and try to, create a perceived value. But all I say is, who gives up? Just go after it. Put yourself in the places that are going to facilitate the things that you're trying to accomplish. If you put yourself in a real estate office, that's the first step in creating the relationship with realtors. Once you create the relationship with realtors and you follow up with them, let them know programs that are going on, let them know about down payment assistance programs, give them little marketing that they can pass on to their clients. It's, it would be really crazy to think that wouldn't lead to the success that you want. The more consistent you are at doing it, the more you do it, the faster results will come. It doesn't have to take 5 years, doesn't have to take 10 years, doesn't have to take a long time for you to create business, and it doesn't have to be a thriving, bubbling market. On the independent side of the business, you really only have to close a couple of transactions to really make good money, so keep that in mind. Go after it now. There's still a lot of deals going on, and there's still success to be had. So like and subscribe. I hope that gave you some value. 100 years of wealth to you and yours. StreamHomeLoan.com. We appreciate you. Stay up.